Good morning, everyone. You are watching a live daily market outlook for Friday, 6th of April 2012. We are at the end of the week that was quite active as the past couple of days dollar got strong support after the recent FOMC minutes released last Tuesday, showing that U.S. Officials are not ready for further quantitative easing. That gave a strong boost to the single currency that continued its that extended actually its rally from a recent base at 78.60 zone. We're talking about US dollar index that peaked above 80. At the same time, euro is registering fresh multi-week losses after losing ground from 133.80 zone that capped the short-term price action and dipping so far to 130.34. This is zone of our next target and psychological support at 130.00. Sterling also remains at the back foot after a recent break and a strong rally peaked above 160 handle, holding hitting level at 160.61. Followed by recent past couple of days easing that returned the pair's price back to 158 zone. Dollar yen is still in the corrective mode of its recent highs at 84.17, while dollar Swiss is appreciating. Latest rally of 90.00 base peaked so far just above 92. But yeah, that was our initial target. More recovery seen on the crude oil as it remained under pressure recently, hit levels as low as $101 per barrel 2 days ago, with the renewed fears of supply of oil, pushing the price significantly higher, with the high seen overnight at 103.38. So basically, $2 were regained in past couple of days. However, trend on short-term trend on the crude oil remains still under pressure and more negative, and we are looking for a possible test of psychological level and support at $100 per barrel. From the commodities, gold also remains under pressure as its short-term decline of 1790 past one and a half month high is still trending lower, and the 1612 was seen on 2 days ago low and on the way towards 1600. The psychological support and more significant, very strong longer-term support at 1532, 1522, the double bottom. From the markets, not much expected today. Yes, it's a Good Friday holiday in most of the European countries. Markets will be shut for today, but America remains open, and the star performer today is going to be U.S. non-farm payrolls that are due at 12:30 GMT. The positive forecast is seen also for today, as non-farm payrolls in the latest last month release showed another decent increase, and the majority of analysts see potential for further expansion and further rise of the U.S. jobs, with the solid rise seen also in March. Predictions are ranging between 200 and 230 new jobs seen for the month of March. We're going to take a look in our calendar to see the forecast. 211 is our forecast versus 233 of the previous month. Unemployment is expected to stay unchanged at 8.3%, while average hourly earnings slight increase 0.2% compared to 0.1%. As the market stayed rather quiet during the Asian session, moving within quite narrow ranges, most of the instruments, no significant action is expected basically until America's opening. As I mentioned, most of the Europe markets will be closed for today. Important and significant thing that I wanted to mention before we move to the technicals is the euro's weakness that broke briefly below the 120 peg against Swiss franc, as the euro Swiss yesterday dipped to 119.97. This should be alert for Swiss National Bank, as the broad euro selling is now pushing the currency below this level, and this is a cap for the Swiss currency that was set in September 2011. That might trigger now fresh buying from the Swiss National Bank. We have to closely watch developments in the market, as the euro is still tending towards the lower levels, and the break of this very significant level that was set by Swiss National Bank might trigger some action in the markets. From the technical what the hell did I do? Okay, from the technical part, we're going to take a look now and see the latest movements. Not much seen during the night, but we're going to take a look on the broader picture that shows the steady downtrend of euro dollar after 133.80 zone capped the recent action higher of 130.00 base of mid-March, and so far extension was seen to 130.34, just ahead of our next target. Basically, the very strong support lies at 130.129.73, which is the past 2 months range floor, and the break below this level is set to significantly weaken the current already negative structure on the euro dollar, as shown that our daily studies are all pointing lower, and the break below this level is required to confirm for possible extension lower. Next targets that we have on the downside on the break below 130 and 129.73 come as follows. 128.72 is the low of 9th of January 2011, ahead of 126.22 low of 2012 posted on 8th of January. That will be the next short to medium term target in case of break below this level. Holding above these levels might trigger further range trading, and the range is defined by 129.73 and 134.85, which is the peak of 2012 double top posted at the end of February, that for now offers quite strong resistance. However, on the lower time frames, the structure remains negative, and I would say only break above yesterday's peak at 131.63, where it's also close to it is the 20 days exponential moving average, would delay immediate bears and allow for some stronger correction. Until then, the focus remains firmly on the downside, as the current I would say brief consolidation above yesterday's low remains firmly capped by 20 days exponential moving average on the hourly chart, and studies are still in the negative territory. Only break above 131.63 would ease the current bear pressure. Sterling also is in the short term, near term, corrective consolidating mode after hitting 158.04. This is yesterday's low and our next downside target, ahead of the other one at 157.70 low of 22nd of March. As mentioned in yesterday's presentation, this 158 zone was the first target, as the pair yesterday's low was 158.33, actually 2 days ago, low 4th of April. Now the extension was seen as we predicted, with the not much seen so far of the recovery, as the gains were so far capped at 158.65. This is yesterday's intraday high that so far limits the upside, and also there is 55 days exponential moving average at this zone, currently standing at 158.72. To improve the near-term structure, we need to see break of minimum 159.07. This is the lower platform of yesterday, and only break above here is and this is also the 38.2% Fibonacci retracement of the latest slide from 160.61 that bottom so far at 158.04, and only break above this level is to allow for some stronger correction and prevent further easing of the pair. However, the structure and the hourly and 4-hour charts are still quite negative, especially the 4-hour studies that are firmly in the negative territory, and crossing that cross of 20-55 days exponential moving averages keeps the pressure on the pair, keeping the downside focus 158 and on a break 157.69, with the next significant levels seen at 157.45 zone. These are the peaks of mid-March. Dollar yen is flat overnight, and this morning, after a brief bounce, corrective bounce of 81.82, yesterday's low was capped at 82.40 zone. Significant was yesterday's break below 82 support that was offering good support in the short term, with a brief dip down to 81.82. Signaling that possible further easing is seen as the main recovery of 81.54 low of 3rd of April stays capped under 83.00. Our initial barrier ahead of 82, 83, 29, 38 zone. So far, the studies show the downside more under pressure, with the 20 days exponential moving average on 4-hour chart capping the recent corrective action, and looking for possible retest of 81.82, yesterday's low, a break of which to open next support at 81.54 and resume the short-term corrective action of 84.17, high of peak of 15th of March, and also high of 2012 of dollar yen. That will allow for a further correction of the broader up move from 76.00 to 84.17, and likely to open next downside target 38.2 Fibonacci retracement of the entire move, currently at 81.05. Quick look also on the dollar Swiss. It's in the steady uptrend of 90.00 base, as the latest slide of 93.33 found good support at this zone. Significant is the break above 61.8 Fibonacci retracement at 92.06 yesterday. This was our initial target from yesterday, as the pair found good support at 91.41, and our yesterday's report was the market price was around this level when we said that likely the target is going to be 92.00, break of which to open next one at 92.50. We have seen so far break above this. 92.21 was seen ahead of current corrective consolidative movements lower, with the 91.86 low seen so far, and the hourly 20 days exponential moving average now moving in the sideways, holding the downside for now. Quite flat studies at this point, as the price also moves within a few ticks range. Further reversal is not ruled out at this point, as the 4-hour studies are now emerging out of overbought territory, with further extension lower seen towards next very significant support at 91.41. This is a low of yesterday. Also 38.2% Fibonacci retracement of the near-term rally from 90.00 that peaked at 92.21 yesterday. Also here is 20 days moving average at 91.50. At this zone is expected to hold any further dips in order to maintain the near-term bullish structure intact, and open way for possible further extension higher, with the 92.50 high of 16th of March 2012 seen as the next target after break of 92.21. A situation on daily shows also the strong barrier at 92.35, the 90 days moving average, and the trend line resistance at 92.50, so equivalent to the our static target. There is also the trend line, and only break here actually is to refocus higher levels at 93.00 and 93.33 and confirm the higher low at 90.00 of the rally from 89.30 end of February double bottom. This will significantly improve the current situation as the daily studies are still I would say weak, and the recent brief regain of momentum might be signaling some stronger action higher. So 92.20 and 92.50 are our main upside targets, and the break above these levels is expected to trigger some more significant gains and possible retest of 93.33 peak of 15th of March 2012. On the downside, as we mentioned, only loss of 91.30-40 zone would weaken the current structure and allow for some deeper reversal, while below 91, I would say it's would signal an end of this corrective move and refocus downside 90.00 and possibly lower on a break. A quick look also on the gold. It's in brief corrective action of fresh lows posted 2 days ago at 16.12. This 2 days steady correction so far reached 16.33, which is just above a previous low at 16.28. However, the more significant barriers are still intact as 20 days exponential moving average currently at 16.40 zone. Seen as the next one, along with 16.45, 29th of March low, and the next dynamic one, 55 days at 16.54. Overall, outlook remains negative with the current bounce seen corrective, and as long as 16.83 high of 2nd of March stays intact, there is a risk of a lower top and further extension lower as the structure on the as shown on the daily chart remains firmly bearish after 200 days moving average capped the corrective action of previous low at 16.28 and the break below the bull trend line drawn of 15.22 opened way for further easing, as well as loss of 61.8% Fibonacci retracement at 16.24. Now looking towards the downside, 16.12 seen so far, with 16.04, 16.00 as our next targets, ahead of very significant and strong support, double bottom at of 15.32 and 15.22 lows of 2011 September and December. And finally, just a brief look on the oil. As we can see on the Ichimoku studies, I think I mentioned yesterday in our presentation that daily Ichimoku study, daily Ichimoku clouds base at 101.30 zone so far contained the dips. These studies are started signaling lower, but currently this support was good enough to trigger further bounce, along with as I mentioned, some fears of supply for the crude oil that pushed the price higher above $103. From technical point of view, regain of 20 days moving average at 103, and now might look for further extension, as for our studies are still in the negative territory, but pointing higher. We need to see the break above next dynamic barrier at 104.17. Currently it's 55 days exponential moving average, and 104.30.50 the previous range previous range floor, in order to confirm some more positive tone. Break above 2nd of April lower top at 105.45 is required to avert immediate downside risk and possibly push the price higher towards 106 and 107.70, our next static barrier. On the daily, studies are still negative and pointing lower, as the pair briefly broke below 90 days moving average that was seen on yesterday's presentation as the initial support, as well as break below previous range top at 103.70, opening way for possible test of 100 dollars as next target and psychological support. For now, only break above 105.45 would avert immediate downside risk. Otherwise, we see potential for a break below yesterday's low at 101.07 and possible test of $100 per barrel in the short term. This was all for today. Have a nice day and nice weekend. Good luck.